One of the best gifts this year was the stock market was up. We were up more than 20% so far this year. Bitcoin was up over $100,000. And if you've been following this channel, we have been making some money. But today was different. The stock market fell and the Dow Jones, the US's largest 30 companies, have hit a 10-day losing streak. Its worst 10-day losing streak since 1974. I was negative years old, okay? That is not good, and there is a sign that things could perhaps get even worse. So what should we do as investors? Is this the beginning of something much worse? And how did this whole thing even start? Let's go ahead and break it down. There is a lot of noise and chatter on the interwebs right now. It has gotten so loud that y'all have changed my schedule. This was not the video that I had planned on doing. This is not the hat I planned on wearing today. It was not. But my son had it, and I don't know if this means that his head is large or mine is small. But it fit. Or maybe he stole my hat. Whatever, okay? But the main thing is, prior to today, the market had pretty much had smooth sailings. Here or there, the market did take a dip. But what happened today? Okay, because the market is down more than 1%. And if you scroll, your Facebook groups when it comes to the stock market, you've got anonymous posters just like, oh my God, the stock market is down. Is this it? Is this a crash? Everything is red. People are panicking left and right. So what happened today, and look, what really happened? We know the stock market fell. That's what happened, right? But why? And what does this mean for the near-term future? The quick answer is this. The Federal Reserve said they were going to cut interest rates, and they cut interest rates by 0.25%. Now, if you have been somebody who has been around this channel and a long-time subscriber, you will know that we have talked about the Fed cutting interest rates and raising interest rates. I had a whole playlist about interest rates. We've been talking about it for a very long time. Okay, I think we kind of played that whole thing out, okay? But today was probably the first time in several months where they did something and it really hurt the stock market. Probably for the first time in maybe a year, and it got everybody's attention. So why was this one different? And what does that even mean? Because we've had a lot of subscribers between now and the last time that this truly mattered. So I'm not going to get into a whole definition of what this means in terms of interest rates because we've done it before. I don't want to bore everybody, and we do have videos on it. I'll link to that whole playlist and that whole thing. But here is the big thing. Interest rates are, let's call it, fuel for the stock market. Generally speaking, when you cut interest rates, the market gets excited. I call it a Capri Sun for the stock market. Just like you get a Capri Sun in front of a kid, they're very jittery and they're very excited. And that's because when you lower the cost of money, because that's what it is, basically, you are presenting companies with an option for a loan. Say, hey, look, I'm going to make this loan cheaper. Why is that important for companies? And why is that important for the stock market? Because a lot of companies can now borrow and, put out loans or bonds rather for cheaper. And that means I can now go invest in more AI technology. I can buy more factories, hire more people, and do more for cheaper now. And we have seen, whether it's from, after the Great Recession from 2010-ish, all the way up until COVID, we pretty much had the greatest bull run in stock market history. I mean, we had almost no misses through that entire run. That was great. And a part of that was because interest rates were extremely low. So the stock market wants that. Well, they cut interest rates. So why would the stock market react in this way? The problem is that the Fed came out and said, look, we're going to cut interest rates this time. But in 2025, we might only cut them 2 times. 10 of the Federal Reserve chairs, I forget exactly how many there were. I'm sorry, it's been a long time since I was in econ class. It used to be a test question. It's been a long time. Anyway, 10 of them said, hey, we expect right now, they kind of take a survey or whatever, but 10 of them said, we only expect 2 cuts in 2025. Everybody in the stock market looked at that and said, that's not enough for me. I'm hopping out. And that is an overreaction. Keyword, overreaction. And that is primarily what you are seeing right now in the market. So the next question is this going to continue, and is this going to be the cliff in which the entire stock market falls off and continues to fall? And how should you react to it as well? We don't know what is going to happen tomorrow, okay? And I don't have a forecast of what's gonna happen tomorrow or even the rest of this week. I can tell you this, we are gonna run into earnings season. This may help or hurt, okay? Especially between now and January-ish. We're gonna find out whether or not people are worth spending the way we expect them to spend at the end of December and the holiday season. I will say this, we did see a record amount of spending for Black Friday. I think that is a good sign that consumers are good. They're fine. They've got money and they've been spending it. If you have money to spend for Black Friday, I don't see what would have happened between Black Friday and the holiday shopping season where you went from that to a recession in a month, right? Just because interest rates changed, in fact, got better in some cases. That's from a consumer perspective, nothing can really change, right, in that amount of time. So you're not going to find out the results of that until 2025. So a part of that, again, I think this is an overreaction, and there's usually a good sign for the economy that people are still spending. I say this all the time, two-thirds of our economic strength of how we measure the economy is based on consumer spending. So for me, this is an overreaction, which tells me this is an opportunity for buying. So whether your favorite stock is Tesla or whatever your favorite stock is, Broadcom, people are talking a lot about that. Stock I told you about a long time ago. Call it what it is. But whatever your favorite stock is, if it happens to be down, and it's happened to be down significantly, you've already done your research, keyword, you've already done your research, then this can be an opportunity for you to buy, especially, again, if it's just a basic index fund. This is your opportunity to buy and get what you've already wanted on your wish list, themed, to pile in, because that item is on sale right now, and hopefully it might be on sale for tomorrow. The problem, and why this has gotten even bigger than perhaps what it should have, is because from the election till now, because of the extra excitement around the new administration and the excitement around crypto, we've had a lot of, I don't want to call them casuals, but we have a lot of new people in the room, and people who were in the room in 2020, the market the bottom fell out, left, and then came back into the room because, like, oh my God, things are back, memes are back, let's just buy up all the stuff. And the first time that they've had a bump in the road, everybody's acting a fool, where everybody else who's been here, who's been subscribed, who's been learning about the market and long-term investing are like, hey, why is everybody screaming? Why is everybody moving so fast? What are y'all doing? Everybody relax. That is kind of the vibe and the feeling. And you're starting to see everybody else kind of panic, whereas you should probably just like stay still. And while they're like throwing stuff around, you should probably kind of like reach and kind of grab the stuff that they're like kind of throwing out the window, because everybody's kind of panicking. That's kind of what's happening right now. Because remember, just last week, I was talking about greedy season, and how people are acting a fool, and how, you know, everybody's not really acting rationally based on what we saw just a few years ago. That might be coming right back around. And remember, the shares that you saw me buy of NVIDIA when NVIDIA was absolute trash in 2022, and people were talking about NFTs and all that stuff that wasn't working back then, that was the season in which I was loading up on a lot of those tech stocks. I'm not saying that the market is going to crash. This is not, if this was it ain't because of interest rates. Okay, it might be because of tariffs or taxes or U.S. national debt ceiling or something like that. That ain't today. Okay, that ain't today. Today is a time for buying and building, and then we'll see what happens policy-wise down the line. So this is an opportunity for you to buy and to really just remain calm. And you already know, we already have an expectation rather of what we think is going to happen on the calendar for the Fed. Your job right now is to keep your blinders on and really tune out the noise, because it is going to continuously be noise in 2025, and that is going to be the issue. I've already had conversations with people who, this is my investing strategy, this is what I've always done, but hey, should I invest in cryptocurrency? Should I really lean towards and do like this crazy thing I've never heard of? Okay, I'm not anti-crypto. I own crypto. I'm not anti-Tesla. I don't know why people think that's the case. I own Tesla. I've owned it for a while now. Follow your investing strategy. There are going to be a lot of meme coins, a lot of trash stocks that people are going to hawk at you and just throw at you. You don't have to invest in every single thing that people are telling you are up 15 or 39,000%. And there are going to be things that are like that. You don't have to do that. Okay, follow what works for you. If you are investing in something, I've seen this happen as well. Say, hey, the stock that I own is only up 35, 40%. Last I checked, y'all, that is still very good. Okay, that is, the average is 10%. That is what the S&P 500 has done over time when you include dividends. Okay, so if that is the average, which is hard to beat, professional fund managers very rarely beat the S&P 500. So if you own a stock right now and you're up 12, 13, 14, that is good. Okay, that is very good. So when you see somebody post some crazy gain online, and the issue is, you know that they aren't studying, you know that they're not subscribing, you know not reading books and doing all this kind of stuff, that is when you know there's an issue, and you start to feel this inferiority complex, or you know that you feel like they didn't deserve it or whatever. That is a thing. That is a thing. Warren Buffett has talked about it. I think the exact quote was, you can't stand to see your neighbor getting rich knowing that he is dumber than you, which is wild to say, but it's true. And he went on to say that causes idiotic decisions, and that causes greed. And again, that does make a lot of sense, because if I am looking at somebody who I know has never invested before, doesn't do this, isn't studying, isn't reading and doing all the work that I know that you do, or that we do, or that I've done, and they appear, right, because it's the internet, right, but they're appearing to make all this money, I'm like, well, I could have invested in a dadgum meme and made 500%. What did I go to school for, right? What did I do all this for? And people saw this, right? We all went through it. A lot of us, rather, went through it in 2021. And we're like, well, shoot, I'm going to go do that too. And then you go do it, and then you lose money, and then we all put on clown mask, right? So that is the feeling that you can get when a lot of that craziness happens. And that is a risk that we could be running into. But right now, bringing it back to today, we got to bring it back in focus, because right now, as they are running for the exits, this is just one bad day. And you should and can absolutely be looking at this as an opportunity instead. You don't have to panic. You have to plan. All right? Now, if you want to know what stocks to buy and which ones make the most sense, then these are the videos that you want to watch next.